We are now joined by Mr. Ranjan Sinha, Director at Adani Port SEZ. He joins us live from Ahmedabad. Mr. Sinha, good morning. This is Nikunj Dalmia from the Mumbai studio. At a time when general trade seems to be slowing down, you are expanding. So what's the rationale behind expanding in Kandla?
As a matter of fact, port business is not a very temporary, short span or short-term business. What we are looking at India's growth story, and if you see, the cargo has been growing in the country, though it is muted at this particular time for last year or two. But we expect that cargo growth will come back to its normal 10 to 14% in a few years' time. In any case, if you see otherwise, in our country, the berth capacities are short of the requirement of the trade, exim trade. We are looking at filling the gap of requirement of the exim trade.
Right. Mr. Sinha, if you could give us exact figures in terms of what is the kind of investment that you would be requiring to develop the bulk terminal, and what kind of capacity are you looking at over there?
Well, we signed the concession agreement with Kandla Port Trust last week, which is design, finance, build and operate bulk cargo terminal at Kandla Port. This bulk cargo terminal will have 4 berths, 600 meters in front and 600 meters behind, and will have capacity to take Cape-size vessels. So we are looking at the capacity of about 20 million and to at least able to operate the port with 15 million ton throughput a year, few years from now. And top line should be around 450 to 500 crores when it runs at its capacity of our throughput of 14 to 15 million tons. This will be in line with our own dream that where we want to reach 200 million tons of throughput in India by 2020. And this project will further assist us in reaching our target.
Right. And what is the investment that you've made?
This investment in this bulk cargo terminal will be to the tune of around 1,200 crores over a period of 24 months when we expect to commission the project.
So, how have you funded this project? Has it been through internal accruals, or have you tied up with someone for these funds of 1,200 crore rupees?
As a matter of fact, it will have usual, mix of equity and debt. And that should not be a problem given our track record and the balance sheet. And we would be able to access from the market as well. So this is in advanced stages of doing the financial close, which we expect to do in a month or two.
So what would be the debt on your books post this expense of 1,200 crore rupees?
Well, offhand I won't be able to tell you, but about this project, it will be 1-to-1 debt equity ratio so far as this project is concerned.
You already have your own port, which means the Adani Group they have their own group. So why are you expanding at Kandla?
See, Kandla is the biggest port in terms of throughput in the country. And Mundra Port is ranked number 4 in the country and also the biggest private port in the country. So both of these are strategic locations having huge northwest hinterland. And therefore, both ports have been growing over last many years. So we expect this growth to continue. So far as this project in Kandla is concerned, it is a part of the same strategic nature of the business and location of the port.
Will the existing venture or the new initiative, will it be part of Adani Enterprise or will this be part of Mundra Port?
No, this will be, Mundra Port has now recrested with Adani Ports and Special Economic Zone. This venture at Kandla Port of the bulk terminal will be a subsidiary of Adani Ports and Special Economic Zone.
And final question for this project, what are the chances that you would rope in a PE player? Are you looking at selling some stake?
I don't think we are looking at selling stakes at this particular time. Maybe that promoter's holding which requires to be brought down to 75% over a period of time and there's some timeline given by SEBI. That may take place as per requirements of SEBI.
So what is the current promoter holding in the company?
It's about 77.5%.
So you will bring it down by 2%. So are you looking at what, a fresh stake sale? Are you looking at dilution? Are you looking at a QIP?
There are various options which are being considered, which will you come to know in a few months' time. I won't be able to say on that.
But which is a possible option? I mean, market conditions are bad, so I'm sure it will not be a QIP.
Yeah, there are so many factors, including the various options which we will weigh. And I think within a few months, given the time limit which SEBI has put, you would come to know about our decision as well.
All right, Mr. Sinha, I appreciate your time. Thank you for joining us.